Hi, my name is Greg McCoach, editor of the Mining Speculator. Welcome to the January 2021 Metals Investor Forum. With me today are three companies that I follow in my newsletter, and I'll introduce them right now. The way this is going to work is I'll do a talk for about 20 minutes, and then each one of my panelists will be doing about a 12 to 15-minute talk with their presentations. First up will be on the panel will be CEO Janet Lee Sheriff of C2C Gold, along with other management team member Sean Ryan from the famous Yukon days exploring up in the Yukon. Second up will be President and CEO Joe Hebert of Outcrop Gold with an exciting project down in Colombia. And last but not least will be President and CEO Brian Fowler of North Star Gold, a recent recommendation in my newsletter. Anyway, with that, I'll get started on my presentation. And yeah, it's been a wild year. We've had made some good profits this past year, but I think it pales in comparison to what's coming. So one of the things that I think is still absolutely relevant is that mining stocks are still incredibly cheap relative to gold. We've had a good year. This in 2020, we've made great profits in the newsletter. People in our industry are making money. And so this is a good start, but yet we still don't see the masses coming into our sector yet. They will. When picking shares for your portfolio, one thing I want people to remember is that grade is king in the mining world. Quality of a resource is far more important than quantity of ounces. The how and why this is the case is really the story of what economic mining truly means in the mining business. And I'm going to be writing in my February newsletter, I'm going to be writing about this quite a bit. And it should be a very good newsletter. I'm going to really go in depth on this, explaining how you as a shareholder can understand what these companies are doing in relation to economic. Economic is the key because that's what these majors want. So a good discovery that's economic can be bought out. And that's what we're all after. Right now, we're climbing the wall of worry. You know, after gold hit a new all-time high, a correction was in order. We knew that gold usually pulls back after that. It has. I think the problems with the dollar and the elections in the U.S., you know, probably added to our demise here in recent months. But I think that's going to come to a close here pretty soon. But the yellow metal is just beginning its upward trek and will shock investors as it keeps on climbing, in my view. We are in a long-term precious metals bull market that will eventually morph into a super bull market. I added this slide because I think people need to really pay attention to silver. I mentioned this in my newsletter in February or March of last year. That certainly proved out to be very profitable for us as I brought several new silver stocks to the table and they performed very well. But I believe silver is ready for the next big breakout to its new all-time high. As it is right now, silver is the only commodity that has not eclipsed the old 1980 all-time high for commodities. Gold, which in 1980 hit $855 an ounce, we've eclipsed that years and years ago. Other commodities have also eclipsed that level. But here's silver, the lone commodity that hasn't done it. To me, that spells value. So I believe the quality, exploration, development, and producing silver stocks will be some of our best performers moving forward. While silver has seriously lagged gold up to this point, I believe that's about to change in a very big way in the months ahead. In my view, silver represents the best contrarian investment in the world today. It's a no-brainer at this point from my perspective. Richard Russell, as gold works its way higher and as central bank inflation continues, the great unwashed public will become increasingly concerned with protecting their purchasing power and protecting what wealth they still possess. Thus, fear of loss and purchasing power continue to power the great bull market in real money, gold. And when I say gold, silver, platinum, palladium, the masses are still involved with the bubble markets. They're doing incredibly well, but it's based on false premises, and we'll talk about that a little later. But this is why gold will keep pushing higher. We'll have these pauses, we'll have these breaks. Things are going to be volatile. As I've always said, you know, we get into these situations, all markets are going to be extremely volatile moving forward. That is certainly proven true. I've been saying it for over a year. I think it's going to get even more so going into the years ahead. Gold and silver and bull markets versus all fiat currencies. That's important to understand. When you look at the price of gold in US dollars, look at it in other currencies as well to see just how powerful this bull is going to be. It's quite an interesting study to do. Some currencies will lose more than others in the coming year. As this happens, you should understand that mining shares will exponentially outperform gold and silver and the general stock markets. That's coming, and I think it's coming sooner rather than later. So when the US dollar collapses, as I believe, it will be the linchpin to the entire world financial system, because the biggest holding of each and every country's central bank is US dollars. And as Doug Casey always says, the US dollar is the best looking nag currency of all the nags at this point on their way to the glue factory. Richard Russell always used to say that it's the cleanest shirt in the dirty laundry, right? All the shirts in the dirty laundry are dirty. It's just that the US dollar has gotten an exceptional benefit by being the world's reserve currency. So one other thing that I'm seeing now that's, I talked about it last year at some of the conferences, that we'd see inflation. It has, you see it mostly in the price of food at the grocery stores. But now I think we're seeing potential for hyperinflation. It's now very high. It's very possible we're going to see this in 2021. Why is that? You look at these charts. Look at the M1 money stock over 40 years. And look what's just happened in recent months. The line's going straight up. Just in less than 1 year, there was a 70% increase in M1. There's been some other charts that were put out lately, and the lines are all going straight up. Well, that is really indicative that this game of creating money and pumping it into the system to create the illusion of prosperity is coming to an end finally. It's been a long haul. It seems like they should have been punished or had their consequences sooner or later, but it looks like now we're really getting close. So pay attention. This chart just shows the deflation assets are at an all-time high versus inflation assets. I believe this chart is going to grossly correct, and you're going to see massive inflation as this happens. So it's interesting to watch. The best thing I can do for my subscribers with this kind of information is first to help them figure out which stocks would best fit their investment portfolio strategies. I have clients from A to Z as far as wealth. I have several billionaire clients that follow me. It's hard when you write a newsletter to try to make recommendations to everybody, to the gamut of investors that follow me. And so, some are better suited to more conservative producers. They're not looking to swing for the fences and try to hit one out of the park. So it looks like, it's very important for me to explain in the newsletter, the various types of portfolios, conservative portfolios, swing for the fence portfolios, and I'm going to adjust the newsletter this year to incorporate that. You need to understand as an investor where you fit in with the mining stocks and make your investment decisions accordingly. But the opportunity to profit in any sector, whether it's exploration, development, or production, is enormous over the next 3 to 4 years, in my view. Believers in bubble world still abound. The masses, why should they leave? They're making a lot of money. Look at what's happened with Bitcoin. It's a hard thing for people to say, hey, sell, get out. These are overvalued markets and buy the undervalued markets. That's been my mantra for the last year. I think that will prove true. When the moment comes where these bubble markets get pierced, the vicissitude in a downward direction will be so vicious, a lot of people will get caught. I say take profits. You've made a lot of money, take profits, build up a stash of precious metals, gold and silver, platinum or palladium, buy some of these undervalued, still really cheap mining stocks compared, relative to gold. So I believe the bubbles will continue until they run dry. So you can make money with those, but watch out below when that moment comes. So many people have asked me, I have to address this because I've been asked this question so much lately. So why can't the Fed just keep creating money? What's the problem? Why can't we all just become, multimillionaires, right? Why can't they just keep pumping money in? What's going to bring it to a stop? Okay. Well, Egon von Greyhurst and his team, they had a recent article that addressed this, and I've talked about this in the past, but in my February newsletter also, in addition to the grade issue I'm going to tackle, I'm also going to go and show from history the best example. There's multiple examples of why the Fed won't be able to keep creating money out of thin air, but the best one is from the 1790s in France. And I'm just going to take you through this real quick in a short way. I'm not going to delve into the specifics, but it's so amazing how eerily similar the statements that these central bankers are making today with those back in 1790 in France during that bubble. And it's so crazy. When you see it, you go, oh my gosh, how can that be? It's like history is repeating itself. It's almost mirrors one another. So anyway, I would say here's why. Even the most delirious bull investor today cannot deny the correlation of our market's historical rise to the equally historical rise in our money supply and unprecedented debt. France in the 1790s, like the US and EU and Japan today, was fully committed to a policy of debt and delusion. Fed policy evolved from a one-time 2008 emergency measure. Remember, they told us, oh, we got to do the quantitative easing. We all found out about the word quantitative easing, right? They always use those deceptive words to kind of make it into something nice. Sounds like it's a good thing, right? But they said, oh, we're only going to do this one time. Well, then there was QE2, QE3, on and on. So they've now become a long-term drug dispenser of new money and low-rate debt for years to come, creating and extending an identical market and the class of the bought speculators as U.S. markets reach for record highs. Once again, our thespians at the Fed will pretend to adjust rates. They have to kind of double speak, saying that, oh yeah, we're going to watch rates, we'll raise rates if inflation gets bad. But the bottom line is, with public debt soon passing 30 trillion and climbing rapidly at this point, they just simply can't afford to do it. They can't raise rates. They're caught. So as long as this cost of debt, the interest rates are stapled to the floor of history, debt levels can equally surpass the record books of history. And we're seeing it. That money is going into the stock markets. It's pumping up the bubbles in the general stock market. It's pumping up the bubble in real estate. But here's the rub. What happens when rates go up? And a lot of people say, well, why would rates have to go up? Well, the soothsayers behind MMT, as Egon refers to it, magical money theory, will say that your inflation and rates won't go up, and the central banks can control them. Well, they can't. And that's like believing in the Easter Bunny. So unfortunately, this gets down to the nitty gritty here. When the rates go up, why will the rates go up? The Fed will lose control. They won't have any control of it. Unfortunately, natural bond market forces rather than unnatural central bankers ultimately get the last say and dark laugh when it comes to rising rates. I've said for years, this will end. It will be the bond vigilantes who cause this situation. So while the Fed keeps creating money and keeps pushing rates lower, they're setting up for this big moment. So with over 18 trillion worth of negative yielding bonds in circulation, I looked at my presentation last January. I remember people were like thinking I was crazy when I said there's 7 trillion worth, and I said it's going to get much worse. And I think people looked at me like I was crazy. 18 trillion. That went from 7 trillion to 18 trillion. That's 11 trillion more in less than 10 months, right? So it's only a matter of time and headlines before someone yells fire in a crowded bond theater whose exit door, i.e. liquidity, is the size of a mouse hole. With little to no yield for overbought risk, bondholders will eventually become bond sellers. And when bonds sell off, the prices tank and hence their yields will skyrocket. And of course, when yields skyrocket, interest rates must spike. And when interest rates spike, party is over. Party is over. And that's why if you look at these examples from history, everybody's just partying on. making all this money until all of a sudden one day it just all comes to a crashing end. And that's what we're going to see. And I think we're getting close now. So what few realize is that we are now in the final chapter of an investment game that will end badly. Major stock markets in many countries, including the Dow and S&P, are now finishing their bull market moves, both short and long term. The fundamental position has been indicating high risk for quite some time, and many of us have been warning about it. And the technical picture is now confirming they were ending a major secular bull market in the general stocks that I believe will end in a catastrophic secular bear market for the general stock market. As that's happening, the Dow gold ratio is going to move big. Right now, we're 17 ounces of gold, with gold at 1847, Dow 31,000, a little over 17, almost 17 ounces of gold to one share of the Dow. I believe this green arrow is going to start to head down. It's been kind of just going sideways here for a while, but it looks like, to me, we are going to start to move downward quite quickly as these things come about. Eventually, I believe it's going to go less than 1-on-1. So that will be quite a dramatic situation. This turn in the Dow will be the start of a rapid fall in the Dow gold ratio, and thus a very strong move up in gold. Gold will continue to move higher. The reason gold is the only true safe haven left for investors at that moment. The bond market's destroyed. The general stock markets are falling apart. The bubble markets are all blown up. Eventually, as these conditions worsen, investors will find their way to the precious metals. They'll be latecomers, but they'll pay top dollar if they can even get any. I'm talking about physical gold there. So with such a gold price, the major gold producers will be raking in the profits. They already are, but they're going to be raking in even more profits as the price of gold continues to push higher, which will prompt buyouts of the top-notch discoveries and massive reinvestment into exploration. This is where this is where we make our money. This is where we operate. This will also be the key to further prompt M&A or big funds back into the exploration sector. M&A activity will begin to increase in 2021 and beyond. John Rubino just had a quote here. I'll just let you read that real quick, but it's basically, governments at the point where they're so reckless, they don't even care. They're not even pretending to cover up anymore. They're just coming out and making crazy statements. If you listen to some of the things Joe Biden said about the money creation he's going to do, it's almost absurd. But that's what happens at the end of this cycle. The amounts of money that have to be created becomes so crazy, and that's the moment when you know you're so close to the whole thing unraveling. So it looks like, and I agree with this John Rubino quote, that's where we are. The best way to roll. I've got a lot of calls lately with all the political turmoil in the United States, people wondering what to do. I've maintained that the best way to roll in this environment that looks like it's going to have high stress, high volatility, all kinds of crazy situations going on. But I do believe gold and silver will be the last men standing from an asset standpoint. So I say have a combination of physical precious metals that you store and protect from fire and theft yourself, and ownership of the highest quality precious metal mining shares, whether that's exploration, development, or production. Sell these overvalued markets. If you've made money, take the profits, build up a physical gold stash. I can't believe I talk to people who have made millions in these markets and they don't own any gold. They don't own any silver. Obviously, they don't understand what we understand. So sell these overvalued markets and buy the undervalued markets. Depending on your level of risk, you should understand where you fit into the junior mining space. We already talked about that. With the mining shares, remember to take profits. Every time one of our companies hits a new all-time high, I'm telling my clients, take some money off the table, right? Don't get too greedy. And with what's going on in the bigger picture, with the potential for civil unrest, civil war in the United States and elsewhere, I think you got to take a preparedness mindset. Just from a food standpoint, I believe that people are going to be shocked at what you pay at the grocery store. Already prices have gone up, but it's nothing compared to what's coming. And I do think, I was just online. There's a farmer out of Nebraska. He's been growing oranges in his greenhouse for 26 years. It's geothermal. He digs down 8 feet in the ground, and it's really it maintains a 52-degree temperature year round. And he he's been growing orange trees in this greenhouse for 26 years. I think we all need to learn how to, grow our own food. It could become very important with what's happening. That might sound a little crazy to some, but just take note of it. That's all. And please remember, ownership of physical precious metals will be the ultimate form of money when the fiat currencies collapse. So with that in mind, I want one last quote here: giving money and power to the politicians, and I would add central bankers to that list now, is like giving whiskey and car keys to teenage boys. PJ O'Rourke quote. I believe that's very apropos with what's going on in our world today. Just my bullion dealership, Amerigold.com, for those looking to acquire any physical gold, silver, platinum, or palladium in coins or bars. My two newsletters, The Mining Speculator, The Insider Alert. If you would like to subscribe, just go to www.discoverynexus.com.